So you're looking to buy a home in Maryland. You probably already know it's a massive, literally life-changing step. But here is the ultimate truth. Before you fall in love with a neighborhood, and definitely before you go touring any listings, your very first step has got to be understanding the numbers. Today in this explainer, we're going to explore exactly why using a Maryland mortgage calculator before you make a purchase is the absolute most important thing you can do to protect your financial future.
Right off the bat, you have to ask yourself, does that dream home actually fit your budget? I mean, it sounds like a totally simple question, right? But buying a house is a monumental financial commitment. It requires hard data, not just a wish or some rough guess you made in your head. It is incredibly easy to get caught up in the emotional thrill of house hunting. We've all been there. However, letting your dream home dictate your finances without doing the math first, that's just a guaranteed recipe for disaster. We need a reality check, and we need to let the numbers guide our decisions.
To get us there, here's our roadmap for this explainer. We'll start with the home buyer's reality check, then cover why you need to calculate before buying, uncovering true monthly costs, testing your budget scenarios, and finally, planning your financial future.
All right, Section 1, the home buyer's reality check, where we look at dreaming versus budgeting. Taking control of your finances early is the smartest way to protect your investment. Look, buying a home requires careful planning, pure and simple. Before you start spending your weekends at open houses, you absolutely must understand your true purchasing power. Knowing your buying power is crucial in the local market because it prevents you from falling in love with a property that's ultimately just going to make you house poor. Careful planning means acknowledging that your budget dictates your options, not the other way around. Moving right along to Section 2, why calculate before buying. This is all about the sheer power of digital tools. Think about the old school way of budgeting for a second. Manual calculation, it's slow, it's tedious, it is highly prone to human error, and it really only handles basic math. Contrast that with a digital Maryland mortgage calculator. It gives you instant results and super high precision. Crucially, it allows you to easily compare different scenarios and factors in the really complex stuff like local taxes and private mortgage insurance. When we're talking about hundreds of thousands of dollars, a math mistake is a risk you simply cannot afford to take. A robust digital calculator is exactly what separates a stressed-out buyer from a successful, confident one.
Which brings us to Section 3, uncovering true monthly costs. We need to look way beyond that initial sticker price. Okay, when estimating costs, you absolutely need to know the acronym PITI. That stands for principal, interest, taxes, and insurance. A lot of first-time buyers just calculate the principal and the interest and think, great, that's my monthly payment. But if you miss the taxes and insurance parts, you will absolutely think you can spend more than you actually can. PITI represents the true, holistic cost of your monthly mortgage obligation. Let's break those components down a bit further so we're totally clear. The principal is the actual amount you borrowed to buy the home. The interest is basically the fee the bank charges you for the privilege of borrowing that money. Taxes refer to your local property taxes. And insurance, well, that includes your standard homeowner's coverage, plus something very important, private mortgage insurance, or PMI. If your down payment is under 20%, the lender requires PMI to protect themselves. And yes, it's an extra cost tacked right onto your bill every single month until you build up enough equity. That is exactly why we need to calculate it early.
And here's the kicker. This is exactly why you can't just use some generic national calculator you found online. Property taxes vary significantly by county. As our source notes, Baltimore City tax rates are much, much higher than those out in Talbot County. A local Maryland mortgage calculator lets you input these specific local tax rates. If you skip this step, your monthly budget estimate could be off by literally hundreds of dollars every single month, depending entirely on which side of the county line you decide to buy on.
Let's shift gears to Section 4, testing your budget scenarios, where you can map out your financial limits safely.
Actually, finding your numbers is super easy. It's kind of like a financial sandbox. You just plug in your target home price, enter your down payment, and you can play around with the percentages to see the impact. Choose your 15 or 30-year term, and add the current interest rate. With just those 4 simple inputs, you get a comprehensive look at your financial reality. You get to test out all sorts of what-if scenarios right from your couch before you ever sit down to make a real offer.
Now, you might be thinking, well, what if I haven't talked to a bank yet? What interest rate do I even plug in? If you don't have a pre-approval yet, our source notes that using a current average mortgage rate of around 6.59% is a highly realistic starting point. It keeps your estimates grounded in today's actual market conditions, rather than just wishful thinking.
Okay, this is where the math gets really fascinating and, frankly, a little intimidating.
Look at how different terms radically affect your long-term costs. A 15-year fixed loan at 6.0% means a higher monthly payment of $2,100, but your total interest paid over the life of the loan is $125,000. Now, if you drop to a 30-year fixed at 6.5%, your monthly payment drops to $1,550. That feels amazing for your monthly budget, right? But wait until you realize the total interest paid leaps to a staggering $310,000. And just a tiny 0.5% bump to 7.0% skyrockets that total to $345,000. That's a massive amount of money. This perfectly proves why you have to use a calculator to see the long game, not just your immediate monthly bill.
When we talk about those monthly payments, you've got to keep the golden rule of mortgage budgeting in mind, the 28% rule. Experts strongly recommend keeping your total housing costs, that full PIT we talked about earlier, under 28% of your gross monthly income. This leaves the remaining 72% for your other debts, your living expenses, and hopefully, some savings. A proper Maryland mortgage affordability calculator will help you determine instantly if your planned purchase fits safely within this slice of the pie.
This leads us perfectly into Section 5, Planning Your Financial Future. Let's talk about the long game and the hidden expenses of homeownership.
To really grasp that long game, you've got to understand your amortization schedule. This is basically a detailed breakdown showing exactly how much of your monthly payment goes toward the principal balance versus the interest over the life of the loan. Early on, the vast majority of your payment just covers interest. It hurts, but it's true. Over time, however, that shifts, and more money actually chips away at the principal. Reviewing this schedule acts as a literal roadmap for your loan, letting you visualize exactly how and when you actually build real equity in your home.
But hey, building equity is just one piece of the puzzle. You also have to plan for the hidden expenses of homeownership. When you're testing your budget scenarios in the calculator, remember that you also need cash on hand for closing costs, which usually run about 2 to 5% of the total loan amount. You also need to budget 1 to 3% of your home's value annually just for routine maintenance, not to mention having a solid buffer for sudden emergency repairs. Knowing what you can truly afford means leaving comfortable breathing room in your budget for these inevitable extra costs. As Benjamin Franklin once put it, an investment in knowledge pays the best interest. I think this brilliantly sums up our explainer today. Taking the time to actually use a Maryland mortgage calculator, testing different interest rates, factoring in local property taxes, and understanding your amortization schedule, that is a massive investment in your own financial knowledge. And it pays off by preventing you from making a devastating, decades-long mistake.
So, I'm going to leave you with this final thought. Are you letting your dream home dictate your financial destiny, or are you taking control of the math first? Don't rush into the emotional side of buying until you've grounded yourself securely in the numbers. Get online, find a reliable Maryland mortgage calculator, run your personal scenarios, and take absolute charge of your future today. Thanks for hanging out with me for this explainer, and hey, happy budgeting!